Hey folks, this is Roger Scott from Wealthpress. I'm the head trader from Wealthpress, and I wanted to talk about something really cool today. I wanted to talk about the gold market. All right. Now, I've been talking a lot about gold, and gold's been making a multi-year high. And my specialty is the stock market. I'm not a gold expert. We have James West, and we have others who are better at that type of market. But I'm a technical trader, and I've been very bullish on gold for many reasons. But I've actually, I want to show you guys a study, a technical study, a statistical study. It's usually very different from what we usually do. We usually talk about gold on a fundamental basis. But there are some significant studies that tell us that this may be a really strong time for the gold market. And I want to share them with you. And I'm going to talk about how you can profit from this phenomena that I'm seeing happening. Now, what you're looking at now is the gold market. This is the futures contract. And you could see here over the 9 months, we've been going higher and we're breaking out once again. We're making a multi-year high. This is a 3-year high. And now this is a 5-year chart high. And now this is a 10-year high. And gold futures prices, as you could see here, going back all the way to 2012 now, we are at the highest level since 2012. So we're talking 8-year high. This is a monthly chart. So as you can see here, gold has been rising. And typically, gold rises when stocks or economy goes through a period of uncertainty or downside. And right now, we have the COVID-19. We have a lot of uncertainty with earnings. We have a lot of uncertainty with global events. We still have a lot of uncertainty that hasn't been resolved with China and the trade war. I mean, we've had the phase 1 agreement, but honestly, that was lip service, in my opinion. And most importantly, we have the election. So there's a lot of uncertainty in the stock market, and that's one of the reasons why gold is going up. But I came across a research study, and I wanted to share this with you. Now, over the past 12 months, gold and silver ETFs, exchange-traded funds, and right now you're looking at a gold contract, at the actual futures contract, the nearby contract. So this tracks the last 10 years of gold, and here we're looking at 20 years of gold. And you can see here, up, it went down, it's been really congesting, and now it looks like it's breaking out again. And it sounds about right. I mean, it's been kind of in a holding pattern for almost 8 years, 9 years here. So it is reasonable that it breaks out. But all these opinions on gold are very subjective. I wanted to show you some hard data. So ETFs, gold and silver ETFs, exchange traded fund, they've reached $200 billion, doubling the level from a year ago. And that's obviously reflected in the price. But based on the last 15 years of data, all right, now you may want to write this down. Whenever the combined quantity of gold inside of all the gold ETFs, and we can calculate this, we know all the gold ETFs, and we can see how much influx have gone into it after each quarter is done. And over the past 6 months, we've seen an increase of 20%. Actually, about 22% to be specific. Gold ETFs exposure have increased 22%. Now, here's where things get really interesting, okay? When we see exposure in gold ETFs increase by over 20% in a 6-month period, all right? And this has happened out of 179 occurrences as far back, and we've seen this, I'm going back to 2005, okay? Since 2005, the last 15 years, we've had 36 times out of 179 occurrences that gold ETFs, the holdings of gold, has jumped over 20%. So ETFs, gold ETFs, increased their gold position by 20% or more. It's happened 36 out of 79 times. Now, let me tell you what happened each of those times. When this happens, when gold ETFs increase exposure by 20% or more, and it's just happened 17% higher, gold prices 1 year later on average. 3 years, 40% higher on average. And 5 years, gold is 106% higher on average. All right? Think about it. So let me review this. Anytime over the last 15 years, anytime gold ETFs, we take all the gold ETFs, all the gold exchange traded funds, and they report how much higher or lower they hold at the end of the quarter. So this is just a very simple, we don't have to sit there and calculate this. We can just get the numbers and figure them out manually. But whenever they increase their exposure by 20%, the ETFs, not gold contracts, not the futures contracts, ETFs, combined by 20%, and they have this last 6-month period by 22%. We typically see, on average, 17% higher gold prices over a year, 40% gold higher prices over 3 years, and 106% higher over 5 years. So if this is correct, and it has been, we've seen this 36 times out of 180 occurrences since 2005, we've seen gold prices jump. Now, when I talk about gold prices jumping, gold will jump in the spot contract, the futures contract. There's the GLD, which tracks the same way. If we look at the max, you could see they track each other. This is the contract, the gold's futures contract, and this is the ETF. And there's also, there's leverage. This is NUG. It's a leverage 2 times gold. So you can get your exposure with gold 2 times as much. Regardless of how you trade gold, regardless of what you use to trade gold, this is inverse directional. There's a bull and there's a bear. So this is just the opposite. But you could see here it's moving higher as well. But the bottom line is, regardless of how you trade gold, there's a good chance that over the next year, over the next 12 months, we're going to see gold higher by about 17%. Over the next 3 years, we'll see gold higher by 40%. And there's a great chance we'll see gold higher by 106%. But that's not all. There's more to this story. This phenomena happens with silver too. It's not just limited to gold. And for 6 straight months, silver ETFs, they have seen their investment grow by 34%. So as over the last 6 months, there's 34% more silver in silver ETFs than 6 months earlier. And during the 4 major gold bull market runs of the last 50 years, silver has outperformed gold each and every time. So last 50 years, we've had 4 gold bull market runs. Each time that happens, silver has outperformed gold by a percentage margin, by a large account. What does that tell us? Well, we're seeing a gold rally. Well, look at silver. Does it look very different to you? Not at all, right? And silver's been really, look at this. I mean, it's been just doing nothing. Now, if we look 20 years, you'll see here we're just getting started. Silver is much lower in comparative to gold. Look at gold futures contract. Gold is almost where it was 10 years ago, but silver is just getting started, all right? And in each case, silver lagged significantly in the early years, but outperformed it in the end. So you always watch, whenever you see a gold bull market, you'll see gold start the outperformance, but silver will be stronger. And this thing that I've told you about with the gold market, with this 20% ratio in 6 months, it applies to silver as well. So I'm expecting both gold and silver to rally because why? Well, as I said in the beginning, we've seen in the last 12 months, gold and silver ETFs reach $200 billion, doubling their exposure. And yes, over the last 6 months, silver, we've seen 34% increase, and gold, we've seen 22% increase. And as I've said, out of 179 occurrences, this has happened 36 times. And each time it's happened, we've seen gold prices double, go up 100% in 5 years. And if we're going to see a strong rally in the gold market, we're going to see a ultra strong rally in the silver market. And again, in the last 50 years, we've had 4 bull gold rallies. And each of these times, silver has lagged in the beginning, but in the end has outperformed. So statistically, silver begins the rally with gold but lags behind it, but as the rally continues, it outperforms. So what does this study tells us? It's telling us that it may be a really good time to invest in SLV, which is the silver ETF. And as you can see here, it's making a multi-year high. This is actually a 1 year high. Let's see here. 2 year, oh yeah. Let's see, 3 years. Yeah, highest price in 3 years. How about 5 years? Yep, highest price in 5 years, but not 10 years. So we may see silver go from 19 all the way to the 50 level, whereas gold, let's look at GLD here. Let's give it a second. It's taking a little while to load. But gold may not go as high. So we may get a rally from gold. But again, if you look at the 20-year chart, we're almost at the 20-year high. So we can surpass this and go higher. I mean, for gold to go to 2,000 wouldn't be such a big deal. But again, silver, look at the potential we have here. Silver can go up 2.5 times as much. And again, every time there's a gold rally, silver starts out lagging behind, but finishes the route ahead of time. And every time we've had 4 gold rallies, massive super gold rallies for the last 50 years, each time silver participated. And again, we're seeing double the exposure of precious metals, both gold and silver, that we've seen a year ago in all of the ETFs combined, all the gold and silver ETFs combined. And that is a very, very strong bullish signal for both gold and silver. And this is a statistical analysis. It's not a theory. It's something that we've analyzed with actual numbers. Hope that helps. Talk to you guys soon. Bye, everyone.